Collective research. Active fundamental research in global capital markets. Make informed decisions.
Coca-Cola, or Coke, is a carbonated soft drink manufactured by the Coca-Cola Company. In 2013, Coke products were sold in over 200 countries worldwide, with consumers drinking more than 1.8 billion company beverage servings each day. Coca-Cola ranked number 87 in the 2018 Fortune 500 list of the largest United States corporations by total revenue. Based on Interbrand's Best Global Brand study of 2020, Coca-Cola was the world's sixth most valuable brand.
Global challenges. Global distribution. Coca-Cola is officially available in every country except Cuba and North Korea. However, it is reported to be available in both countries as a gray import. As of 2022, Coca-Cola has suspended its operations in Russia due to the invasion of Ukraine. Legal discussions in the Middle East. In the early 20th century, a fatwa was issued in Egypt to discuss whether Muslims were allowed to drink Coca-Cola and Pepsi-Cola. The fatwa stated that, according to Islamic law, the consumption of foods and beverages is permitted unless specifically forbidden by the Quran. Chinese market entry. Coca-Cola entered the Chinese market in the 1920s without a localized name. Local shopkeepers created their own translations, leading to meanings like female horse fastened with wax, or bite the wax tadpole. In the 1930s, the company settled on the name Coca-Cola, meaning to allow the mouth to be able to rejoice.
Sales. The sales revenue has been consistently increasing over the years, from $34,300 million in 2018 to $43,004 million in 2022. This indicates a positive trend in the company's ability to generate revenue. Net income. The net income shows some variability but has generally increased from $6,434 million in 2018 to $9,542 million in 2022. This suggests that the company has been able to improve its profitability over the years. Operating income. Operating income has also shown a positive trend, increasing from $9,152 million in 2018 to $10,909 million in 2022. This indicates that the company's core operations are generating more income, which is a positive sign for investors.
Total assets. The total assets of the company have increased over the years, reaching $92,763 million in 2022. This growth may indicate an expansion of the company's asset base, potentially through investments in new projects or acquisitions. Total liabilities. The total liabilities have also increased, reaching $66,937 million in 2022. This suggests that the company has taken on more obligations, possibly in the form of debt or other liabilities. Debt-equity ratio. The debt-equity ratio has decreased from 2.32 in 2018 to 1.5159 in 2022. A decreasing ratio may suggest that the company is relying less on debt financing relative to equity, which can be viewed positively by investors.
Quick ratio. The quick ratio has fluctuated over the years, from 0.79 in 2019 to 0.97 in 2023. While it has increased, it is still below 1 in some years, indicating a potential risk in the company's ability to cover its short-term obligations without relying on the sale of inventory. Current ratio. The current ratio has shown variability from 0.92 in 2019 to 1.14 in 2023. While the ratio has generally improved, it's important to note the fluctuation and assess the composition of current assets.
P/E ratio. The P/E ratio has varied over the years, from 23.61 in 2019 to 28.04 in 2022, and then decreasing to 23.71 in 2023. A declining P/E ratio could indicate a potential re-evaluation by the market, and investors may interpret this as the company being relatively less expensive compared to previous years. P/S ratio. The P/S ratio has also shown variability, ranging from 5.65 in 2019 to 6.55 in 2020. It decreased to 5.69 in 2023. A lower P/S ratio may suggest that investors are assigning a lower value to the company's sales relative to its market capitalization.
The ROE of 40.52% is impressive, indicating effective use of equity to generate returns for shareholders. The net margin of 22.19% and operating margin of 28% suggest healthy profitability. The asset turnover of 0.46 indicates room for improvement in utilizing assets to generate revenue. The equity multiplier of 3.97 signals a relatively high level of financial leverage.
Coca-Cola is a good investment. Sales and profitability growth. The consistent increase in sales and net income from 2018 to 2022 suggests a positive trend in revenue generation and improved profitability. The growth in operating income further supports this positive trajectory. Financial stability. The reduction in the debt-equity ratio from 2018 to 2022 indicates that the company has been relying less on debt financing relative to equity. This can be viewed positively as it signifies improved financial stability and reduced financial risk. Liquidity improvement. Both the quick ratio and current ratio have shown improvement over the years, indicating a better ability to meet short-term obligations. The upward trend in liquidity ratios suggests enhanced financial flexibility. Valuation metrics. The decline in the P/E ratio from 2022 to 2023, along with the decrease in the P/S ratio in 2023, could be interpreted as a potential positive. A lower P/E ratio may suggest a more attractive valuation, making the company relatively less expensive. ROE and profit margins. The ROE of 40.52% is impressive, indicating efficient use of equity. Additionally, healthy net and operating margins, 22.19% and 28%, respectively, suggest the company is effectively managing its costs and operations. If you would like us to research a stock, please tweet at Collective REC or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective Research. Active fundamental research in global capital markets. Make informed decisions.